In 2007, the fourth largest investment bank in the United States filed for bankruptcy. It had a whopping $6 billion worth of assets to its name, and when it closed down, it caused the world's economy to wobble. Millions of people all over the world were left in shock with one question in their mind: how could it have possibly come to this? On today's episode, we will be talking about the Lehman Brothers Holdings and its rise and fall in the world of investment banking. This is Fraud Explained. To enjoy more videos, subscribe to my channel and click the notification bell, or else I'll be looking into you too. Now, how exactly do you build an empire that is worth billions of dollars and somehow manage to lose it? Stay tuned until the end of the video to find out just how over-leveraged the investment giant was and how everything unfolded after bankruptcy was declared. This may come as a surprise to many, but the multi-billion-dollar company came from humble beginnings. It all started when Henry Lehman migrated from Germany to the United States of America in the year 1844. He decided to settle in Montgomery, Alabama, where he opened up a small dry goods store, which he named H. Lehman. A few years later, his younger brother, Emanuel and Meyer, followed him to the United States. The eldest Lehman then decided to rename his business to include his brothers. Thus, Lehman Brothers was born. At that time, the brothers were unaware of just how much their small family enterprise would grow and expand. The brothers may not have started out with that much money, but they found a way to build their fortune through trading in cotton. In the mid-1800s, cotton was one of America's most valuable crops. The crop had an exceptionally high market value, and this prompted the brothers to accept raw cotton as payment for their goods. Eventually, they opened up a second business to solely trade in cotton. For a while, business was good as it continued to grow and flourish. However, in 1855, tragedy struck the family when Henry succumbed to yellow fever. Although the remaining brothers were still reeling from the loss of the eldest Lehman, they strived to continue their trading operations. Shortly after Henry's death, Emanuel decided to relocate to New York City, where he set up a Lehman branch along Liberty Street. Lehman became a member of the Coffee Exchange in 1883 and one of the New York Stock Exchange in 1887. Roughly 10 years later, the business began underwriting. Underwriting is a process of guaranteeing payment in case loss or damage occurs. It serves as insurance in case something goes wrong for your property. Lehman first underwrote for the initial public offering of the International Steam Pump Company. Emanuel's son, Philip, and grandson, Robert, eventually took over the family business, letting Lehman underwrite for nearly 100 other companies. The business fell on hard times after the death of Robert Lehman in 1969. The company was left with no clear Lehman successor and was experiencing the pressure from the shaky economic conditions of the late 1900s. Lehman Brothers threatened to collapse if no drastic measures were taken to ensure that it would be able to continue its business. It was during that time that Pete Peterson, chief executive officer of the Bell & Howell Corporation, stepped in to save the firm. Pete Peterson was able to acquire investment banks Abraham & Co. and Kuhn Loeb & Co., and they merged together to form Lehman Brothers Kuhn Loeb Incorporated. With this merger, their firm became the United States of America's fourth largest investment bank, just behind investment giants Salomon Brothers, Goldman Sachs, and First Boston. In just a few years, Peterson was able to save Lehman Brothers from facing a grim fate and turn it into a firm that experienced a record amount of annual profits. In the early 1980s, Peterson decided to promote Louis Glucksman, the then president, to become his co-chief executive officer. He did this in response to the heightened tension between the firm's investment bankers and traders, hoping that he may be able to clear the air. However, adding Glucksman into the mix seemed to stir the pot even more. Glucksman had introduced various changes to the way things were being run, which did not do much except fan the flames. A power struggle ensued, and pretty soon Pete Peterson was stripped of his title, leaving Glucksman as a sole chief executive office of Lehman Brothers Kuhn Loeb Incorporated. With Pete Peterson gone, the bankers who were upset over the hostilities in their work environment decided to leave the firm as well. It was said that the working environment within the firm was incredibly competitive, to the point that it became toxic for all those who were a part of it. The loss of many of its bankers made for bad business, and Glucksman was eventually forced to sell the firm. However, this was not the end for Lehman Brothers. In 1984, American Express-owned brokerage company Shearson bought Lehman for roughly $360 million. This became a revival of sorts for Lehman Brothers, who many had thought was on its way out. Lehman began to perform efficiently again, effectively climbing up the ranks again. Chairman and Chief Executive Officer Richard S. Fuld Jr. had a hand in raising the company up again. Fuld was able to steer the ship, so to speak, throughout financial crisis. After establishing its prominence as one of America's leading investment banks, Lehman began to dabble in mortgage origination and is noted as one of the very first firms on Wall Street to go into that line of business. Unbeknownst to Lehman's workers and supporters at that time, this was the beginning of the end. Lehman made its name in the subprime market. Well, firstly, what is a subprime? Subprime mortgages are loans that are offered to those whose credit scores are not so good. They were considered to be high-risk investments, but they were attractive because they had high returns. Subprime mortgages would usually come with high interest rates, which, when paid off, would let the banks earn a lot of money. Lehman eventually ended up procuring roughly $680 billion in assets, with only $22 billion and $500 million in firm capital. The riskiness of their venture were so high that even the smallest percentage decline in value of real estate threatened to wipe out all of the firm's capital. Things, it seemed, were hanging in a very delicate balance. In an unfortunate turn of events, Lehman was, quite literally, given a run for its money in the early 2000s when the whole nation faced the United States subprime mortgage crisis. The firm lost a lot of money, mainly due to the fact that it continued to hold on to large positions in subprime. Lehman stocks plummeted, losing 73% of the original value. Nearly 2,000 individuals working at Lehman lost their jobs. Investors continued to lose confidence in Lehman as its stock value plummeted even more. On September 10, 2008, Lehman announced a loss of $3 billion and $900 million. Braving the growing global financial crisis, Timothy F. Geithner, then president of the Federal Reserve Bank of New York, called a meeting to discuss the next steps that Lehman should take. Lehman confessed that it had been looking to sell the company and it was negotiating with the Bank of America and Barclays. However, the deal fell through. Lehman was left with no choice but to declare bankruptcy. On September 15, 2008, Lehman Brothers filed for a Chapter 11 bankruptcy. In a Chapter 11 bankruptcy, the corporation's assets and debts are reorganized in an attempt to cut back on their losses and pay back their creditors. To this day, the Lehman Brothers filing for bankruptcy remains the largest in American history, with Lehman holding over $600 billion worth of assets. The impact of their filing was magnanimous. Lehman declaring bankruptcy was considered to be the height of the financial crisis and was labeled as the biggest corporate failure in all of history. The Dow Jones suffered the largest drop in points in a single day since a day after the 9/11 attacks. Distrust towards the banking industry reached an all-time high. Commercial real estate deprecated, and firms and companies all over the world that were tied to the Lehman stock announced significant losses on their parts. A rough estimate of 25,000 Lehman employees from all over the world were left jobless and were forced to figure out their next steps after the firm's collapse. Today, Lehman Brothers Holdings Incorporated still exists. However, this is only because the firm is still trying to settle claims and lawsuits from when they filed for bankruptcy before they finally closed down for good. From rags to riches and back to rags again, the story of Lehman Brothers teaches us about the importance of making good financial decisions. If you were one of Lehman's chief officers, would you have made the same choices? What would you have done differently? Share your thoughts and comments down below, and I will be responding to all comments in the first hour. If you were intrigued about the story of the Lehman Brothers, why not head on to my other video on the world's most overpriced commodities to see how outrageous some things cost and just how much people are willing to pay for them. That's it for today, and I hope you enjoyed the video. If you did, then please do subscribe and leave a comment letting me know. Stay tuned and stay educated.